We had the S&P at 5,000, questions about inflation, questions about jobs data, and now the UK in a recession. What do you think will drive markets forward?
Yeah, it has been quite the week, and I think it really shows us the inflation volatility in action, which is a key view for us, that markets are still sensitive to inflation data because markets are still sensitive to this idea that central banks are responding quite sensitively to macro data. So we've seen quite a big shift in the market pricing of central bank rate cuts this year, this week alone. Now the market's only pricing 3.9 cuts for the Fed this year, only just above 3 for the BOE. There's been some big moves in the rates markets, and it's really this macro risk theme that we think matters in the investment outlook this year.
But Karim, what have we learned over the last 6 days? Is it that actually, the U.S. economy can hot up a little bit more than expected, or that driving inflation down is not going to be in a linear move?
It's the latter. It's not going to be a linear move. We always said that last leg down from 3 to 2 or 4 to 2% is not going to be a straight line. Now, we still think there's a good chance that inflation will fall to target this year. The goods disinflation, the unwind from the pandemic, is very powerful this year. We still have pressure in services. We saw that in the US CPI. But that goods disinflation is going to trump the latter. So we still think disinflation is the theme. Markets will like it, which is why we're positive on US equities over the next few months. Treasuries, it's a bit more mixed. We like to be targeted. Okay. So we're tactical with our duration view. Our favorite bucket is the 3 to 7 year. We think that gives you the best risk reward. Whereas we're a bit more cautious the further out the curve you go, because risk premium has its role to play in terms of what investors are demanding.
And Karim, in terms of US equities, again, there's the Magnificent Seven. If you're not a pure AI play, I think you fall a little bit behind. But how do you choose the sectors you want to be invested in?
It's actually something we're seeing a lot in the flow data. I like to analyze ETF flows because they're liquid, they're transparent, they give you a sense of the money in motion. And you see that dispersion is the name of the game when it comes to selectivity in sectors, in factors. So I look at the investor positioning over the past couple of months. December was a record for large cap US equities. January was all about tech and healthcare. So you have this targeted sector picks. So it's a bit of both. At a benchmark level, we're neutral on US equities, but when we add on the sector conviction, we become overall overweight because of tech.